Hello and welcome to Shares Expert Eye. In this edition of Expert Eye, we're talking to three leading experts about ISAs and the benefits of such a product for investing. Let me introduce Francis Moore, Managing Director at European Pensions Management.
Hello.
Charles Galbraith, Managing Director at AJ Bell Youinvest.
Hello.
And Andy Parsons, Head of Investment Research at the Share Centre.
Hello.
Andy, for those new to ISAs, why choose an ISA over a regular savings account?
Investors need to look at the tax efficiency that an ISA offers them and the ability that they can potentially, if they go to a stocks and shares ISA, they can hold other forms of investment in there where they have the potential for greater capital growth, albeit they have to appreciate the risk. And in terms of cash versus stocks and shares, currently cash ISA will allow you to invest 5,760, whereas a stocks and shares you can go to 11,520. So you have to understand the risk reward.
Clearly there's been some changes in the budget just recently announced, and those allowances are going to change going forward, and obviously they'll be combining cash ISAs with stocks and shares. Do you think that people will then possibly look at the rebalance between the cash ISA and the stocks and shares ISAs?
Any legislative change and the proposals that have come out today are most welcome, because obviously it's to encourage more people to invest for their future. So it's something that we would endorse. And I think it's just understanding it's down to personal preference of getting that risk reward and how much you are prepared to put in. But obviously any increase is most welcomed, and it's something we would fundamentally endorse. But I say, in terms of whether you put more into cash or more into stocks and shares, that is down to personal preference.
Charles, have you got anything to add to the question about?
I think the only thing I would say is it's become easier following the announcements in the budget. It was always a bit of a choice between the cash or the stocks and shares. The fact that the government's now going to merge those two, it's just going to make it a better product actually at the end of the day, and people will have more choice, so it's good news.
And do you think that people will look more at stocks and shares simply because potential returns are higher at the moment?
Yeah, I think I would hope so, as long as people have got that slightly longer term view. Clearly, if people are worried, then they shouldn't go into stocks and shares because there is a risk that you might lose some money. But over the longer term, there's only one place for it, and that is in stocks and shares.
Francis, have you got anything to add to that as well? Clearly changes in the budget announcement, much more attractive to invest in cash because it's obviously a higher allowance now than before, but clearly potential gains are greater in stocks and shares, and losses, I hasten to add.
Absolutely. I think one of the issues here is in risk and reward, and particularly to try and ensure that less sophisticated investors who might otherwise have gone for cash are not unduly attracted into the new combined ISA, and therefore take on an investment scope that perhaps is slightly beyond them. There is a technical feature too that we're going to need the details on, yes. Which is that currently under a stocks and shares ISA, any cash that's retained in there would be taxed. So we're hoping that the whole process is actually going to get simplified, and it will be gross interest all the way through, and that from an administration point of view I think will be welcomed and will relieve a lot of reporting.
So obviously we've got to see what is in the announcements and the details of it, but
as
hopefully there will be a fair tax treatment for cash,
yes.
Be it within the stocks and shares ISA and
it would be very unfortunate if there was suddenly a negative twist to this in terms of the cash component suddenly becoming taxed. If it's gross, I think it is. This really does represent a really good step, and well done to the coalition government for coming up with this.
Have you got any other sort of things we can talk about in terms of tax treatment on ISAs, in the past and going forward? Any other benefits at all that you can,
essentially the ISA has been widened out in terms of investment scope, so not just cash, but also looking towards AIM as well. That, of course, increases the risk component. There is talk of trying to create a new set of instruments in relation to P2P lending and crowdfunding. That's a way off yet, but certainly discussions between Treasury and industry are taking part on that issue. Again, that is welcome in that it really does open up the ISA to a wider range of investments, but as always with these things, the investment component must be suitable for the individual and the risk appetite that they have. Otherwise, people can be lured into areas that unfortunately could lead to loss, and that would be unfortunate. The ISA has a tremendous record so far, particularly in terms of just the sheer scale of ISA take-up amongst the population. These are all good innovations, but with any innovation, there is risk and there is reward.
Charles, obviously there's been the changes. Have you got anything, tax?
Well, I was going to say, I mean, the sort of slight irony about all this is, I think, has been said that ISAs have been well supported over the years. They've always grown. I think they started at 2,400, I think, and here we are, 15,000 all these years later. It has been a well supported product. There were these little rumours at the end of last year that the government were looking at it and sort of thinking, oh, is there going to be a cap of £100,000, say, which on the face of it sounds like quite a big figure, but over a number of years you can get there quite easily. It would appear on the back of what's happened in the budget that there's been, if that ever was true, there's been a bit of a rethink about that. And as George Osborne said, it was a budget for savers, and it looks like he's backing that up with some real figures. So great. Do
you think it obviously increasing the allowance to 15,000 and the upper limit and actually having ISAs will increase as well, because that's quite a big jump from the previous 11,520?
Yes, it is. It really is quite a significant jump, and it's probably one of the biggest we've had for a long time. Yeah. In the past, there were a couple of times when they sort of added 2 allowances in 1 year, but this is a big move and a very positive move, and I think it will help people think about the long term, and using ISAs is a very, very important part of financial planning.
But governments change these tax rules all the time, don't they? Do you think this is perhaps just something as a run up to the election, or do you think this really is to try and help savers save going forward?
Well, I really hope that they've sat down and thought about it, and perhaps following the reaction they had to this little tentative issue that we had at the end of last year about trying to bring in some sort of cap, and they've realised how valuable an ISA is and how keen people are. And there are an awful lot of people in the UK that hold them. They're all voters. Yeah.
Andy, obviously, new allowances, £15,000. Yes. It's going to hopefully encourage more people to save and save and save.
Yes.
Do you see, perhaps from the ShareSets point of view, that you would look at a lot more people opening up ISAs with you? Clearly, a combination of cash and stocks and shares.
I think we've already alluded to from my colleagues here. It's about long-term savings. And people need to appreciate they need to save for the longer term, for their lifestyle and years ahead. And therefore, the increase in allowance allows them to take control, but to proportion that element between cash and risk investment. Yeah. We fully welcomed and fully endorsed AIM shares into ISAs last year. That was a tremendous change, and it really encompassed everything that people were looking to do. And people need to remember, of course, the beauty of that ISA is you're not subject to capital gains tax at the end, and that's the beauty. So the growth in there, it is growth. Yeah. Albeit you have to appreciate the risk. But I think it allows people to really make some steadfast plans for the future. They can look at for longer term savings. And if you have got shorter term needs, that may be where the cash element comes into. Yeah. That ease of access, where the longer term, the risk reward of the stocks and shares gives you that ability to save for whatever it is, school fees, holidays, whatever, retirement.
I hope we can look at this all again in 3 months' time and have a completely different view on it.
Yeah.
The other point, Mike, I would say, actually, is just picking up your point about capital gains tax. There's also an administration benefit of an ISA. You don't have to bother with all these forms. You don't have to put it in your tax return. All these things are a bit dull. Not having to do them, having them in a nice little wrapper. It's all managed very well on these platforms these days. It just makes life a bit easier, really.
Simple, isn't it?
Simple is what we need.
Individual simple savings account, it should be called. Yeah. Obviously, going looking at the stocks and shares element of ISAs, are there any particular shares you can or cannot invest in through the stocks and shares element of the ISA?
Well, in terms of investments that can be held in there, what you're fundamentally looking at UK listed shares, so on the main indices. You can hold some overseas, but they have to have a dual listing. But providers are able to determine and advise you on that. But you can hold collectives or funds, as they're known, or ex-unit trusts. You can hold investment trusts. You can hold exchange-traded funds. So there is a multitude of different types of investment vehicle that can go into that wrapper. And obviously, they all have varying degrees of risk, but also what type of market or sector, geographical region they're following. So it allows people to really build a diversified portfolio in terms of that risk reward.
And Charles, there were some changes to the AIM rules and investment in ISAs earlier in the year. Clearly that's helped people get into the smaller, slightly specky things.
Yeah. And we with Bell Youinvest, we've certainly seen a big rise on the back of that, plus the fact that stamp duty is going to disappear on AIM stock. So that's all beneficial. I think the only point I would add to that is clearly different providers will offer you different things, and people need to look quite carefully. If I want to buy X, can I do it through that provider? So it's just doing a bit of due diligence, really.
And perhaps in your experience on ISAs, other tax changes are going to be beneficial for everybody, and the allowances. Stocks and shares ISA element of it all, through your platform, were you able to buy a variety of funds and stocks?
Oh, absolutely. As full a range as we can get to.
Yeah.
I think it's very important to be able to offer investors diversity. And what we've seen today with the new combined ISA coming forward, which we understand to take effect a month or two into the new year. So that's another slight technical conundrum that we've all got to deal with. Yeah. But it will allow a little bit of time to get systems and things like that into place. But I think anything that does offer good diversity, and what we're really seeing here is the ISA is becoming a plank that you can't divorce from, although it's always been there for the ability to provide a sort of a short-term haven to be able to draw down on for various activities or actions or expenses that families may come up against. Increasingly, it's also becoming a plank of retirement planning. Yeah. And I'm often asked the question, as the pensions, the European pensions side comes from, should it be either or? And I will always unquestionably say, if you can afford both, do both. Yeah. They are slightly different models. There are different restrictions, but increasingly, we want to see people saving. That's the really important thing. And if ISAs is the way to encourage that, that's fantastic.
But as long as it's obviously more tax efficient to do it through an ISA than other savings forms.
Well, I think again, I don't want to get into too many of the complexities between ISAs. ISAs are very simple, and one of the issues I see for the ISA industry going forward, as we keep developing retirement strategy. And remember these days that people are not, if you like, living just beyond state retirement age. They're living much, much longer. What's behind the raising of the state pension age, for instance? And so people can easily be living right through to the 90s. Children being born today, if the statistics continue in the way they are, will be living to over 100. Well, that's a heck of a long time to be working out some sort of retirement strategy. And ISAs, I think, are always going to be a key component of that strategy.
Yeah, and the other point on that, I think, is we're going to be talking about pensions later. Sometimes a few clouds over the pensions world. In the ISA world, that really hasn't been the case. They've always been seen as a good, solid, simple, cheap product. PEPs have gone in there, child trust funds will be going in, they've created the junior ISA. So they're a vehicle that people understand. I think it'll get probably a little bit more complicated when we've got the joint one, and we will just need to think about that as an industry. But they've got a good sort of marketing cachet, I suppose, and that's fantastic because it hopefully will bring people in who might be a bit worried about other vehicles.
But clearly people do need to be educated. There's a lot of people out there who should be in ISAs, don't really know how they work, about the allowances and the returns. And clearly it's part of, I suppose, your platforms is to produce some education around the ISAs.
Well, I think the education can start from the junior ISA.
Yeah.
From juniors at school, going through school, learning through the business studies, economics, learning that there is a vehicle in which their parents, their grandparents could save into them for. Okay, the levels are lower, but the compounding effect over time, and it depends, what they're looking for, because we know how difficult it is for youngsters, mid-20s to get onto a housing market or to get on something like that. These are good stepping stones, investing into something like this. And people should always appreciate it's not just about a lump sum investment. No. You can do that pound cost averaging effect, compounding those returns time and time again, month on, year on year. That all comes to fruition for you if you've got a good strategy. And obviously taking a junior ISA and then having it morph into what would you call the adult ISA, this is a tremendous step that we have now to help people look for the longer term.
Even if it's not just the children themselves saving, it's the grandparents and the parents putting something aside each month just to build a bit of pocket money. Almost.
Exactly, and if you have got the pocket money, high street, a savings account or a junior ISA.
Yeah.
Let it go tax efficiency. And in terms of risk reward, many would argue that if you're putting in when you're with a child who's sort of 5, 6, 7 years of age, they've got a much longer time horizon. That risk spectrum should be much wider.
In France, we were talking about longevity earlier on, and clearly people are going to live a lot longer, 80s and 90s, and we've got to look at this, not only the ISA savings bit, but also the SIP area and the pension areas. Would you advise people to look at a SIP as a standalone pension product, perhaps use ISA as a pension product as well?
I think one of the slight concerns about relying on, say, an ISA purely for retirement planning is the fact that you can, of course, take the cash or cash in the investments and take it out. So there's always going to be the risk, and I'm absolutely with you on stimulating youngsters. You can do the same thing actually in pensions as well, and locking in those very early years, that growth. And we've done calculations which show that by the time of 18, there's enough in both, and potentially within the junior ISA and within the a junior SIP, or as we want to call it, that actually you might not have to put another contribution in during your entire working life. Yeah. Now that is taking away what otherwise is a massive challenge in the industry. So the younger we can get people saving, the more we can cascade wealth from one generation down into the younger generations, the better, because it's setting them up for life. But the one caveat I have is that under the ISA, that fear, isn't it, of somebody who perhaps inherits trust or something like that and blows it on the Ferrari.
Very tempting, isn't it?
It is very tempting.
Especially when you get into the late 60s.
It is that accessibility issue, the fact that you can take it out at any point in time.
Yeah.
And appreciating that whilst you might take it out, you can't just sort of put a new amount in. So you take out an X amount in 1 year, you've only got an annual limit.
Yeah.
So, and you have to be very wary of if you are starting to delve into it, particularly if it is there for a strategy.
Yeah. But I think a lot of this is that we've got to evolve retirement strategy in this country, across the world too. But it's moving on now from just being a point in time. In some ways, if we look back 20 years, it was much easier. You retired.
Yeah.
Now we're looking at already much extended retirement zone. And that needs a completely different philosophy to the way in which we manage it. And the old arguments of, annuity versus perhaps cap drawdown or something like that, that's morphing now. And we need a much more sophisticated solution, which a lot of brains in our various industries are trying to get their minds around.
It's not an easy one, is it?
It is very difficult. Very difficult.
Charles, you're talking about the SIPs and ISAs. What's the best way to plan for your retirement? The gap is narrowed. In the budget with the marginal rate of tax coming down on taking out money from pensions. Clearly, you can take out cash tax-free from ISAs. Do you think there's a strategy you should mix both, have some pensions and some ISAs?
Yeah, well, I would agree before. If you can do both, so much the better. I think the change in the budget was the penal rate of 55% tax on taking money out of the SIP has gone or will be going. Again, I'm not exactly sure of the details, and you will therefore be taxed on your marginal rate of tax. And for people who are at the lower end of tax, that is absolutely fantastic. Even people who are paying the higher rate of tax or the additional rate of tax, there's still a benefit. So it does certainly increase the interest in SIPs.
Charles, how would you advise somebody to choose an ISA provider, and what sort of fees could they expect to pay?
Yeah, well, I think there's sort of 4 things really people should be looking at. The first is the actual provider. What are they like? What's their financial standing? Are they making money? Because obviously you don't really want to go to a provider where there are any issues around their financial stability. Secondly, I think it's look at the blogs, look at reviews, see what service level the company is giving. Things are very open these days.
Yes.
You can go on lots of sites. You've got to take some of the things with a bit of a pinch of salt, but you'll get a bit of a feel. Thirdly, I think, and very importantly, obviously, it is charges. What would you expect to pay? sort of wrapper charge, somewhere between £50 and £200, something like that. It does depend from provider to provider. There's obviously a dealing charge, about £10. Funds, so unit trust funds have been charged in various different ways. Some people do a flat rate charge. Some of them have got ad valorem charges, and again, you need to look at them quite carefully. It is complicated. I think you've actually developed a site, the DIY investor site, on which you can plug in and compare a whole load of platforms.
Yes, thank you for that plug. We can go off and you can type in how much you want to invest, lump sum and monthly sums, and it produces your list of providers and their charging structure. And clearly those charges are going to change again. I know since the RDR changed this year, providers are still tinkering with their pricing. Do you think that AD Bell Youinvest will retain their pricing structure pretty similar to it is now?
Well,
most are changing, I hasten to add.
Yeah. We spent a long time sort of agonising around the new pricing, as everyone else did, and there was lots of excitement about it and lots of columns in the newspapers. I think the big move has probably happened now. Will there be tinkering from providers? Almost inevitably, because it's a very, very competitive world out there, and as things change, and the announcements that we heard in the budget will probably make a difference as well, because suddenly, particularly on the ISA world, the competitive base has got much bigger. All the cash-only providers will be very interesting to see how they react to this. So will there be continual changes? Yes. At some point, I think the profitability point I made at the beginning is important. These businesses do need to make money, and as an investor, you want them to make money, because you don't want to be in a situation where that doesn't come. So I think prices can only go so far. Have they got a bit more to go over time? Probably, because things get cheaper, technology gets better, and also if more people come into the market, and I think that hopefully is what we're going to see, then the costs will be spread. So it's all quite rosy, really.
So would you advise somebody not only just look at the pricing, but also maybe look at the company themselves as to maybe the profitability of the company and who's actually providing the service, in case they might be very cheap today, but they might not be around tomorrow to fulfil your trade and things going forward? Would you suggest they look at, in more detail, research the company?
I think it's extremely important. You've got to know who you're doing business with. Have they had any issues in the past, for instance? Look on the FCA websites. You can find quite a lot of information. Go to Companies House to get their report and accounts. It's all worthwhile doing if you're putting in money which over time will grow to a very substantial amount.
It could be your lifetime savings. You certainly don't want the risk with Icelandic banks we had a few years ago, where you thought you were safe and suddenly you're potentially wiped out.
No, that's right.
Andy, have you got any sort of comments about costs and platform providers?
I think, as we've just heard, I think we're in a world now, it's like a new paradigm, where it is the difference between a fixed fee versus an ad valorem fee, a percentage. And investors need to look at, if they're going to continually invest into that ISA, what the impact is. If you have got an ad valorem fee, those fees start ratcheting up over time. Whereas if it's a flat fee, you know what you're going to be charged year in, year out. And that's what you've got to look at. And so I think there will be some pressure still out there, but it's making it very interesting for investors.
Are your pricing quite transparent on the Share Centre website?
At the Share Centre, we run a flat fee.
You do?
Yes. We run a flat fee on it. And that's it. And then people have to understand that that's the administration charge, and then, as we've already heard and alluded to, there's obviously dealing charge on top. But it depends on what type of investment you're going into and the frequency that you are transacting. That's what you need to look at and take into account. But in terms of the actual cost of running that ISA wrapper, people need to appreciate and look at, am I being charged a straightforward flat fee, or do I have an ad valorem fee, which every time I put in my new annual allowance, my cost is going up?
Yes. France, at European Pension Management, again, you've got quite transparent fee structure on your website. And
yes, absolutely. And we're in exactly the same space in terms of looking very much at flat fees. Why? Because a value-based charging structure will actually erode your savings. Always these things are a question of balance, because obviously if someone has a very small fund, then a percentage-based charge at that stage is a small amount to pay. But be warned, with a long period of time the fund rises, and so those charges creep up, and 0.5% might not sound very much to a lot of people. But my goodness, the difference there compared to, say, a fixed charge where you know what you're getting. But then, echoing again, looking at the due diligence around, is it sustainable? And I think, certainly with this whole funds debate that we've been seeing, what we don't want is a race to the bottom. What we want is the ability of firms to earn a decent return in a competitive market. I mean, that's the key thing, that there is competition, but not to have a race to the bottom, because that actually will kill service, will kill the flexibility that, we're seeing being introduced today.
And I think that's key for investors. We've alluded to already. Have a look at those websites. Have a look. Most of them will publish. All of them are up for awards. They all put in for these recognitions, etc. And have a look at the customer service.
Yes.
See how they rank, because there are customer service awards out there. Have a look at their website. They'll all publish them each year when they win these awards, and so you can understand what you're getting, because it is the appreciation. A company does need to have a level of income coming from it, because it costs to run that wrapper. But it's actually looking at it in terms of saying, but what other benefits do I get for it? What other services do they offer me on top of just looking after that money? Can I get any research from them? Can I get any advice from them, etc.? Looking for that added value, that extra dimension that they can offer you.
It's not always just price, it's content, it's customer service,
Yeah,
through all the platforms.
And is the company actually, what's it in its mind? Is it there for an exit strategy in 10 years? Or is it going to be matching you in terms of providing for your lifetime? That's quite an interesting challenge.
Yeah, I think, just going back to something you touched on before about price changes recently, I think the big change, if I didn't say this before, is transparency.
Yes.
It's a lot, and that's why it's caused a lot of angst, is that people have suddenly realised some of the charges they've had have been quite big. They just didn't realise they were paying them. It's become much more overt now, and that's why there will be a little bit of turmoil, I think, in this market. But that's good, because ultimately we'll get to a new level, and I think the opportunities people have to invest will be widened, and there are lots of competitors out there that they can go and look at, and hopefully they'll pick the right one for them. Hopefully it's ours.
Hopefully one of you three.
and one of the things, again, to look at is what technologies companies are using, because the consumer is way ahead of us at the moment in terms of a financial services industry, in terms of what they're looking for, their need for more immediate satisfaction, which we have to contrast with long-term delivery. So we already have tensions between the consumer and ourselves as an industry in terms of what we're trying to deliver.
But that comes at cost to you to provide the speed of execution and the platform, the mobile, the tablets and the other forms. It's a cost to you as a base.
Absolutely.
But clearly, the end consumer is going to benefit from all this transparency, and hopefully with the new ISA rules, which obviously will evolve over the next few weeks, it's got to be better for them as well.
Absolutely.
Yeah. Can I say thank you all very much indeed for taking part, and we hope that you've enjoyed this edition of Expert Eye.